Buddy, Uneducated Economist here. So before I get started on today's live stream and we're waiting for people to come in and join in, I'm going to tell you about a little story that happened to me earlier today. So we went to the fair, but before I went to the fair, I was sitting in my front yard, sitting in the chair, watching Freddie play ball. He was sitting out there playing some baseball, and this car pulls up, right? And out of this car is this young redheaded college age student, and she starts coming up. She has like a clipboard and stuff, and I'm like, okay, Saturday, young girl getting out of this car, coming up, and she starts to talk to me about educational material. Like she wants to sell me educational material, and she has this really thick Polish accent, and I'm thinking, whatever it is you got, I'm buying, right? Kind of feeling. And it's just, thinking about like, what is this door-to-door sales going on here? What is this thing, right? And so I'm kind of listening to her talk, and I'm like, well, we're heading out the door. We're going to the fair, and you'll have to talk to us later if you're wanting to sell us something. And so anyway, she takes off. I go and I research this company, and it's actually pretty funny to find out. Hold on. Before that happened, I posted on Facebook. I'm like, hey, and I had a business card. I'm like, this chick just stopped by the house, and it's like, really sketchy feeling. I don't know, super sus, right? And people like on Facebook, all my friends in the local area, they're like, no, the police did a post saying that she was going to be going around and that it's totally legit. And I'm like, well, that very well could be legit. Like, I'm not saying that it's a scam or anything like that. But this whole thing was just really sketchy and really shady to begin with. Just the feelings that I was getting from this, it was just like she was like kind of pushy to like wanting to go into the house and talk. And I'm like, no, you're not coming to my house. You're a stranger. And so anyway, the whole thing was just kind of that way. And I was amazed by how many people popped up on Facebook saying, no, it's okay. The police said it's okay. Right. And I'm like, holy crap. Right. So this business model that this chick is working for, it's called Southwestern Advantage. Right. And apparently they've been in business for a long time. They're a legit company. They sell educational books and, material or whatever. And I'm sure that they're probably got plenty of satisfied customers with them. But when I went and checked out the Better Business Bureau and just kind of looking at some of the statements that these people had made or complaints that people had made about this company, and they were all fairly similar. Like they had ordered stuff that didn't arrive. Like that was kind of the major one. And so it was just like some of the ideas of like what it was that was taking place within the complaints. I would definitely say, yeah, I could see where that would be like a major issue that people have. Because like once this person has like sold you the stuff, they're gone, right? They're out of the game. And now you're dealing with some company out there, but it's not like a place that you can really go to, right? So you just have to deal with whatever, customer service help that you can possibly get with. And then trying to cancel subscriptions or dealing with that can be very, very burdensome. And so I would assume that that was kind of like what's going on here. Well, when I went and, like I said, when I was doing some research on this, I also came across like this girl's blog talking about how like, hey, be careful of this. It's like human trafficking, but not like sex trafficking, but just like, these people have to travel all over the country, use their own money, use their own financing to try and sell this stuff. And it's like very burdensome and it's not a very good company, or I don't know, like she had all these complaints to it. But part of it was announcing to the municipalities that they are going to be here, right? That they're going to be in the area. Now, to me, that makes a lot of sense. Like if you all of a sudden just have this girl and she's traveling around door to door trying to sell, like books, trying to sell educational books, it's going to be very sketchy. Like I was already lit up about it. I would imagine other people would be too. I wasn't necessarily going to report her to the police, but I did make a post about it on Facebook, and all these people lit up saying, no, the police said it's okay. Well, that's part of their business model, is to literally go to the municipalities and say, hey, we're going to be in this area. Why don't you make a post or like make an announcement saying that we are going to be doing this and that it's okay, so you don't get a whole bunch of calls coming in reporting on what's happening out there. It's a very strange thing that occurred, and I just thought I would share that with you this morning. What happened with me this morning? Okay, let's talk about the real stuff. 178 people joined in already. All right, that first 4 or 5 minutes was just BSing. Now that we got a bunch of people in here, let's talk about the credible threat theory. Now, for those of you who have been following me on this channel for any length of time, you know about the credible threat theories, and you have now internalized it to the point that you recognize it when you see it within the mainstream media, and especially the articles that we are reading that have been very propagandized to try and push a particular belief. And when we look at monetary policy, things like 2% target is pretty obvious and pretty apparent of the credible threat theory. Now, you can also see the credible threat theory in action when you have the idea, the belief, the understanding coming from the markets that a certain action will be taking place by the Federal Reserve going into the future. They will begin to participate in the market as if that action had already taken place. Mainly when interest rate cuts or hikes have been announced or believe enough within the markets to then start pushing or guiding the markets in that particular direction. And now you can see by the article I leave down in the description, I'm sure there's probably plenty of other articles out there that are saying or showing how the mortgage rates have recently come down to, I think, the lowest in a year or over a year. Now, of course, they're saying this was on jobs reports or something like that. No, it's not. This is now the credible threats coming from the idea of the Federal Reserve cutting rates going into the future, and it is now starting to show itself within the markets, and you can see it right there within the mortgage markets. See, this is the way you witness it. See, like, people who don't understand the credible threat theory would maybe believe this article saying that it has to do with this jobs report. It doesn't. Right? It doesn't have to do with the jobs report. It has to do with the idea of what it is that the Federal Reserve is going to be doing going into the future, and that is that September rate cut. And they're now starting to act accordingly. They believe it may be, or reiterated, or use the symptom of the jobs report to then push the narrative, right, that the interest rates are falling. But the facts are is that they're still falling, and they're falling off of an idea of a credible threat. And so now, where did this credible threat really come from? Well, the credible threat theory, I guess I should say. The credible threat theory came from Ben Bernanke's speech way back in 2002, right, where he talked about how to prevent deflation from ever occurring here, and knowing that at some point they would run into the lower bound of zero, and that having a low neutral interest rate was then going to make it very difficult to operate monetary policy with the adjustment of interest rates. Now, I know all that stuff that I just said could be very complicated if you're new to this channel and haven't really been following much of what it is that I have been trying to, show for evidence as far as monetary policy, the real monetary policy coming from the Federal Reserve, and that understanding that the Fed was losing control of being able to stimulate the economy through the typical channels of interest rate adjustments. Now, it doesn't mean that they lost control. Very important to understand that. Because when you think about it, if they lost control through the adjustment of monetary policy, or through the adjustment of interest rates to guide monetary policy, they have other ways of guiding monetary policy, that knowing that the interest rate adjustments will not operate in the same fashions that they once had. And again, like, I know this can be very complicated and difficult for a lot of people to understand, but ultimately we're going to go back and we're going to try and break this down again so that we understand how the credible threat theory works, because this is evidence of it right now. See, those who have internalized it know this. I'm sure the comment section is filled up with people who totally understand what's happening right now within the mortgage markets. And there's going to be a lot of people out there who believe that they understand what's going on with it. That doesn't have to do with the credible threat, but what they are actually witnessing is a symptom that's driving it, much like the jobs report. Okay, so Ben Bernanke, way back in 2002, put out this speech talking about deflation and how to prevent it from ever occurring here. And now in that speech, he described using something of forward guidance, job owning, signaling, right? And what I have finally termed as credible threat. Now, when you think about it in this fashion, what he had done is he described it with a gold machine. And now, if you have a gold machine, right, a machine that can produce as much gold at will, very little cost or energy, the moment that this information gets out to the public that this gold machine exists, the price of gold on the markets would plummet, right? Plummet immediately. Even before there was even a single ounce of gold produced, before the machine had even been made, just the credible threat alone that this invention can be done, scientifically proven and well communicated out there to the public, that's all it would take to start driving down the price of gold. The machine doesn't even have to exist yet, just the credible threat that it can happen. And now understanding how that operates, like how that credible threat will work, will then give you a better understanding of how these communications that the Federal Reserve is putting out there, especially through the mainstream media, right? Because you can see it plain as day when you finally like internalize it and look at it for what it really is, right? And that is a credible threat. Then you can see how it is that these markets are now being guided by that presumption, right, of what it is that the Federal Reserve is going to do. See, now here's something that I find very interesting is that this is something that I have been saying was going to take place. All right, I have said it over and over again on this channel, like how many times, that all they have to do is put enough of a belief within the markets itself that they will do it. And that's all it will take in order to start driving and guiding the markets in that particular direction. And this is it. So let's say this goes on for a couple of months. What do you think is going to start happening to the housing market if all of a sudden you start having better interest rates available for people out there? Do you think that might stimulate the housing market just a little bit? I mean, it may not do like, some grand stimulation or something like that, but all of a sudden we have better rates available today than we did yesterday or the day before that. And going into the future, if we continue to see things like the U.S. Treasury continue to fall, especially based on some of the risk that has taken place out there, how much better is the mortgage market going to be as far as those availability of lower rates? If the 10-year keeps falling, if the 10-year yield keeps falling, all interest rates will eventually start following that. And again, this is all credible threats because nothing has changed. Not a single thing has changed. And that's the most important part to understand. The only thing that's changed is the belief. And as soon as the belief change, everything changes. And here it is. We can witness it in real time. But those who don't understand the credible threat, right? Those who don't understand how the forward guidance is really working, the signaling, the jawboning, right? And then understanding that it is being done because the monetary policy of interest rate adjustments has failed. It doesn't work anymore. Now, they still need interest rate adjustments. That is still a functioning tool within the financial system. That part still operates. The point of it is that it doesn't stimulate the economy like it once did. That's the important part to understand. See, there was a time, if you had low interest rates, like zero interest rates, for a significant amount of time, you should have inflationary pressures that build up so dramatically within the system that the Federal Reserve would have no other choice but to raise rates. After the great financial crisis and the Federal Reserve dropped interest rates to the lower bound of zero, they could not get the inflation that they were totally expecting from it. Like everybody would have expected from. All that quantitative easing of 1, 2, 3, and 4, right? Expanding the balance sheet, of $850 billion to over $4.5 trillion failed to produce the inflationary scenario that the Federal Reserve was looking for. Why? It's because there was a low neutral interest rate. And now this is the part that really starts to blow people's mind because they don't understand what's really taking place when they start to think about the low neutral interest rate. The neutral interest rate is the rate that's neither accommodating nor restricting the economy. And because of three major global trends that were driving the low neutral interest rate even further closer to zero, which was a demographics issue of an older population, right? Without a younger population to replace it. So this older population, they are more of a burden on the economy, slowing the economy down, right? So this older population was one of the reasons why we're having such a continuation of a neutral interest rate that falls. And it's not just that, it was global growth. Global growth had slowed down around the world. And again, this is all stuff that was happening prior to the pandemic. Global growth had slowed down dramatically around the world, and they had a very small gap between the safe and liquid assets of U.S. treasuries in things like the riskier assets of corporate bonds. And understanding that these three major global trends was driving down the neutral interest rate, and how it is that the Federal Reserve was going to deal with the fact that they could not stimulate the economy when they dropped rates, because even if they hit the lower bound of zero, it wasn't far enough below the neutral interest rate to actually stimulate the economy. This is why it's failed. Quantitative easing 1, 2, 3, and 4 failed to produce the inflationary scenario. It's important to understand it. And it's not me just making this stuff up, but just assuming. I mean, I can't spit this stuff out like this. This is all coming from the Federal Reserve itself. And mainly, if you go and you read John Williams' speech, Monetary Policy for a Low Neutral Interest Rate World, he describes this stuff perfectly. Now, I've read it so many times and communicated it so many times that I've internalized it. I can just talk about it anytime I want. I don't need to find the speech. It's somewhere in here. I can't remember exactly where I put it. But once you understand that this is what's taking place, and how the only way to start raising the neutral interest rate to make their stimulation more effective, the interest rate adjustments, is that they have to have an inflation expectation that is persistently high. By pushing the inflation expectation higher, they can raise the interest rates, the Fed funds rate, and then they can start to, that expectations and the elevated interest rates will start to raise the neutral interest rate. The more they raise the neutral interest rate, the more of an effective tool dropping interest rates will be when it comes time to try and actually stimulate the economy. See, this is important to understand, because this is the way the Federal Reserve is communicating it to the rest of the other central bankers out there. They don't communicate this to the mainstream media. Absolutely not. In fact, if they let this stuff out to the mainstream media, it would fail. The monetary policy wouldn't work anymore. So it's important to know that part about it too. Like, if everybody was to understand the information that I'm presenting to you right now inside of this video, I mean, I'm sorry I didn't put all the links to all the speeches and stuff like that, but really, you can go and become a member of the channel, and we cover all this stuff in the member-only videos. So, you know, for $1 a month, you can go and just research all the stuff you want in those member-only videos. But it's important to understand this, because once you have internalized this and understood the true intentions of the monetary policy from the Federal Reserve, you would know that if everybody knew it the way we know it, it wouldn't work anymore. It would fail. Like, the whole Federal Reserve system would completely collapse. Like, this is not information they want you to know about. And if they did, they would communicate it to you. Instead, they tell you things like 2% target, which is absolute BS. There is no such thing. We know this. Like, anybody who believes that there's a 2% target inflation rate going on out there for the Federal Reserve's monetary policy has completely fallen into their trap. Seriously, like, seriously fallen into their trap. And anybody out there who is communicating that to other people, as far as, like, you know, financial advisors, economists, and economic analysis for, you know, companies, whatever they're doing, and they keep talking about a 2% target, they might as well be sticking their head right in the damn dirt, because they don't know anything about what's going on. I can honestly say that they have this much clue, zero, right? Because how many times have I gone over it and shown you that how Jerome Powell said it back in August of 2020, that they have changed the way that they are viewing the inflation, and that they no longer go for a 2% target, but go for a 2% average inflation rate over time, which means that appropriate monetary policy would seek to achieve inflation that is moderately above 2% for some time. And since they have no way of actually calculating this, because he said that in the speech, that they will have, that they do not have a mathematical formula for figuring this out, we have to know that the 2% target simply doesn't exist. All right? And again, this isn't old dated news from 4 years ago. Michelle Bowman, another FOMC voting member of the FOMC, reiterated that exact statement in a speech that she gave just a couple of months ago. And Jerome Powell in front of Congress had reiterated that, but most people missed it because they didn't understand what the hell he said, because he speaks in such a code, like Fed speak. You know, we covered it. We showed it in this video. We went and listened to the congressman, ask him the questions, and Jerome Powell responded in a way that said that they will go through a review of their money, because they asked him, they said part of monetary policy was to keep interest rates too low for too long. Well, he didn't say it like that. He said extra low or low for an extended period of time or something. And this again was something that we had said on this channel, that they were going to keep interest rates extra low, extra long for an extended period of time to try and create the inflationary scenario to make up for the past deviations from the 2%. I don't know how many times I said that over the course of like 2 years during the pandemic, during the times that they kept those interest rates too low for too long. How many people said that they were creating an unreasonable amount of stimulus within the economy? How many times did we hear it? And I said during that time, once they go to raise rates, which people said they weren't going to do, but once they go to raise rates, that they're going to keep them elevated for an extended period of time, and that people are going to say that they're doing unneeded damage to the economy. I mean, I said this stuff, right? And how can I come up and predict this stuff except that it's simple through the credible threat theory, right? If you just look at it for what it is like, hey, they got to get the market's perception to believe it. And the only way to really do that is to guide their perceptions through the mainstream media and the propagandized information that's out there. All right, I've gone off and up. All right, that was 21 minutes into the video. Let's back it up here a little bit and start reading through some comments. Even before the patent got filed. Yeah, it does, like, just the, like, when you think about the credible threat in the gold machine, it comes down to if it was scientifically proven. That's it. Like, all they have to do is just have a bunch of scientists come out there and say, well, we've looked at the patent, we've looked at the blueprints, we've come up with the ideas, and, shared them, and they said, yes, they can do it. They can do it for pretty much no cost, no energy, and they'll be able to produce as much gold at will. Right? And as soon as that's scientifically been proven out there, the market started moving. And you can see it in all kinds of fashions. It's not just monetary policy. You can see them push this in all kinds of ways. Like, you could probably come up, like, I don't follow a lot of politics out there and stuff, but I'm sure that you could probably find credible threats in all kinds of fashions. I see it plain as day within the monetary policy because I know that's what they're using. Like, they're not going to use interest rate adjustments. It doesn't work anymore. Like, you think about it, there was a time, here, let me just how many people we got? 387. Thank you all for being here. 83 likes. Go hit the like button. We'll get more people to join in on this live stream. With 387 people here, we should have at least 150 likes going on right now. But think about it. During the great financial crisis, and they dropped those interest rates to zero, unemployment started to fall, right? And all the way through Obama administration, through the Trump administration, right? All the historically low unemployment that we had experienced, right? Best jobs market in history, so, in 50, 60 years or whatever, they just bragged about it so much. That, in any classical form of understanding economics, should have driven an inflationary scenario like you wouldn't believe. Like, it should have driven inflation like mad. To have historically low unemployment and have the best jobs market in history, like any typical economist back in the day would have been like, uh-oh, watch it. You're gonna see inflation flying on account of this. And it's ultimately because of the added consumption that comes from it. The more people who are working, the more people you got consuming. The more consumption, right? You have supply-demand imbalances, and prices move up. It's how the Federal Reserve has looked at this their entire time, right? All the way up until it didn't work anymore. And so they saw it not working after the great financial crisis. They're like, crap, we got interest rates incredibly low. They're historically low. We barely raised them. When we did, we only got it up to 2.5% on the Fed funds rate. Pissed Trump off something awful, pissed the markets off something awful, right? So they didn't really increase rates that much when you think about it. So they were still historically low, even at 2.5% on the Fed funds rate. And none of that produced the inflationary scenario that they were looking for. None of it. The only thing that really produced the inflationary scenario was the severing of the supply chain. And since nobody was going to believe that to be the actual reason for causing inflation, when you have to have an inflation expectation that is persistently too high rather than too low, and yes, that is an exact statement from John Williams, New York Fed president, saying that they needed inflation persistently too high. That was the problem they needed to solve, was an inflation expectation that was persistently too low rather than too high, meaning that they needed it high, extra high. All right? And they couldn't get it before. All that money printing, expansion of the balance sheet during quantitative easing 1, 2, 3, and 4, historically low interest rates, historically low unemployment. None of that stuff could produce the inflationary scenario. The only thing that could do it, hack into the supply chain, cut off material. If you cut off the supply and you give a bunch of people demand, here's a bunch of money, go out there and spend that money, right? Boom, you're going to have supply demand imbalances flying through the roof. And that's exactly what we had experienced. Now, knowing from being in a retail space, like I work a retail job, I work in the lumber industry. I not only work in the lumber industry, but I also work in one of the most highest producing lumber states in the nation. I live in Oregon. Right? So not only do I know loggers, I know truck drivers, I know mill operators, I know distribution networks, I know everything about the lumber industry. I could see it plain as day. And when they were using lumber as an example of inflation and money printer go burr, and there was at 1,700 per thousand, and everybody was saying, look, there's all the money printer, look at what it's done to lumber. And I said, what are you all going to say when lumber comes back down to its normal price? How many people are going to have a reason for that? I'm telling you right now, at 1,700 per thousand, everybody is wrong about the money printer causing this lumber prices to go as high as they are. And here we are at 500 per thousand, the same prices that we were experiencing back in 2017, 18. Okay? And really, when you think about it, they changed the contracts, and this is now has an added rail cost into it. So really, these contracts should be a lot cheaper if they had priced them out the way that they used to. So yeah, lumber prices are incredibly cheap right now, considering some of the things that we had experienced over the past 4 or 5 years. Lumber should be just as expensive as everything else, but lumber doesn't have any inflation in it anymore. And I was able to predict that years ago. Why? Because I understand the credible threat theory. I understand the monetary policy because I've read through hundreds of speeches of the Federal Reserve talking about this very subject. I didn't go and cloud my head with a bunch of issues that people are now have a personal problem with when it comes to the Federal Reserve. I stepped into this stuff trying to figure out a way to disassemble the Federal Reserve. You have to do it like I'm doing it. All right, that other way of believing that the Federal Reserve was going to destroy your life with an elevated inflation expectation fell right into their trap. They needed that to occur in order to get the interest rates, the Fed funds rate, to be elevated. It's like it was so obvious to me. And these lower interest rates coming to the mortgage market, I mean, I just said it. It was just like the market will start acting as if those rate cuts have already happened if they believe it enough. Think about all the communication that is now hitting the mainstream media talking about a September rate cut. It's almost guaranteed. Right? I laugh about it because what is this going to do? It's going to start stimulating the economy, and we might start finding where inflation starts to ramp back up. I mean, really, what's going to happen to the housing market if you see interest rates fall? Is the housing market going to get cheaper for people or more expensive? Housing is the number one issue that most people face when it comes to the inflationary pressures. Like housing, whether you're buying a house or you're renting one or whatever it is. Like your housing's the most expensive part of it, and if they lower rates, that's not going to make it cheaper. Wow, I'm going off, aren't I? All right, $5. Let's go check that super chat out. Who do we got here? Hey, thank you very much, Gold Weaver, for becoming a member of the channel. You're really going to enjoy those member-only videos. There's a couple of them out there that I really suggest listen. I mean, all of them are really good, right? But there's a couple of them that I think people should really listen to. The one on dollar funding stresses in China, I think that's probably one of the most mind-blowing ideas that most people have no clue about, and that is how much dollar-denominated debt exists outside of the world. And that paper, that Federal Reserve paper that had come out that we did a review of, is probably one of the most telling. It's complicated, right? We got to go through it. It's work, guys, right? It's boring. It's complicated. Got to get through it. You got to hear me stutter through it all, right? But once you have gone through it, we read the comments, you join in on the discussion of it, you really internalize that information. You're going to be blown away by how how much dollar denominated debt exists out there and how much China has actually used that to their benefit. You know, it's actually surprising. Kraken 2019. Thank you so much for the $5, man. Sorry if this sounds a little silly. Nothing sounds too silly, man. Let's hear it. What if we were in a world where credible threats don't really work? How would central banks have to move? Well, okay, let's think about that for just a second here. Because what if the credible threats didn't work? Well, how would they not work? Well, that would have to mean that people wouldn't believe that there actually is going to be rate cuts in September. You see? So people would have to hear that information and then not believe it. How would that work? Like, can people really not believe it? They're like, hey, the Fed said it. And if the Fed didn't do it, if the people didn't do it, then the Fed would. They would cut, right? But if people believe it enough, they won't need to, because the market participation within the economy is more of an impact on the economy than the actual rate cuts are, the people's perception. So I don't know what it is that they could do to actually screw that up unless people just simply no longer believed anything that they were saying, which they already don't, which works to their advantage, especially when it came to an inflationary scenario. All of it, like just the idea that people don't trust or believe the Federal Reserve is part of the credible threat that then gives them the advantage to have an inflation expectation that is a hell of a lot easier to find. All people have to do is just believe that the Federal Reserve is wrong, right? Screwed up, don't know what they're doing, kept interest rates too low, printed way too much money. All that stuff, elevated inflation expectation. Federal Reserve is sitting there, good job, boys. Right? Just understanding how this is operating is the only way to do it. And like most people hear me and they think I'm just absolutely nuts. I don't know why. This information is communicated right through the Federal Reserve's speeches and statements, right? Not to the public. They don't do this to the public. They only say this to the other central bankers out there. And so you have to go and read their words to their other buddies out there. And it's really complicated. It's boring. You know, so read all through this stuff, and it's just like, man, what the hell are they trying to say here, right? And you have to go over and over and over again until you finally get it. But I mean, what is if the credible threat didn't work anymore, then they would just go ahead and cut. So there is no way they can't have a credible threat if it's well communicated. It's more about how well they can communicate that idea than it is about anything else. Like the idea that they don't have the credible threat, I don't believe that. But how well they can communicate is how powerful the credible threat is. So like if they just came out in a single statement saying, hey, it's a good chance we're going to cut September. And just left it at that, like people would be like, what the hell does that mean? You know? And it wouldn't be that, like people would be very confused about what's going on. And it's just like, is there a cut and what's going on? Right? But if you come out, oh, it's on the table, oh, and all this, raining down of mainstream media attention to a cut in September, and it's just everybody knows it, everybody thinks it, then you start seeing things like the mortgage market start to participate, right? And you start seeing interest rates begin to fall. And the more they do that, they'll get to September and say, well, we did say that if conditions stayed the same, right? You remember them saying that, right? I mean, Jerome Powell said up there, if the labor market continues on what it's doing, and this does what it's doing, and this does what it's doing, right? And he labeled it off like, if the inflation continues to come down and the labor market continues to show signs of stress and all this other stuff, if all these things continue on the way it's happening, then we may have rate cuts on the table. Well, guess what? Nothing stays the same. Ever. Never, ever, ever has anything in the history of time ever stayed the same. So by the time we get there, things will have changed, and you can already see the change taking place with the mortgage market. So we're going to get there, and they're going to be like, oh, man, well, house prices may have gone up, and, and inflationary pressures within the house, within rents and stuff like that are still elevated. We may need to keep the interest rates at the upper level for another meeting, right? I mean, it's just as easy to do that if they have enough belief going into the future right now through the markets that there is actual rate cuts coming. Wow, I'm really going off, aren't I? Okay. Let's check out this other super chat. Thank you so much for that too, Kraken 2019. Redazone, man, you've been really hitting me up lately, bro. I'm sorry I haven't communicated back to you as much as you've hit me up here. So thank you so much for the 4.99. I'm I'm my own economy. What's your opinion on my economy for landlords of 500 units? Okay, yeah, this was actually one that I thought this was a really good question, bro. Okay, so what the idea was is that, okay, so I think kind of like the idea was is that we each have our own economy, right? And so now I think the idea of if somebody's own economy includes 500 houses that they are renting out, wouldn't their economy also include somewhat of a responsibility for the condition of those people? And now I think no, they are not responsible for the condition of those people. The only thing that they are responsible for is themselves and their business and their properties. That's what they are responsible for. They are a business, just like anybody else is out there, and they are a property owner, just like anybody else. I mean, if I had my property in a condition in which that it was there to produce food, I wouldn't be in a condition in which that I need to make accommodating for other people to be happy about the fact that they were on my land. I need to figure out a condition in which that I need to produce as much food as possible. That's it. Right? Now, granted, I don't want to be that kind of jerk boss kind of mentality. That's not what I'm going at. But the point is that if you're not producing as much as you possibly can with your efforts on your land, then what are you doing? You're not doing it right. You're supposed to do as much as you possibly can, and it's not there to accommodate other people. Right? Now, maybe accommodating other people at the time might benefit you, and seeing the benefits of that and being more powerful in that foresight of being able to say, hey, if I provide food and water and all kinds of stuff while people are on my property, I can get a lot more production out of them. And then recognizing how it is that you have this symbiotic relationship with the people around you in order to conduct the most profitable position for not only yourself, but for them as well, because by doing that, you make more profit in on your own. Understanding that is very important, but no, the bottom line is I'm not responsible for anybody but myself. In fact, really, when it comes down to it, everything else outside of me is an illusion, and it's just everything that I'm feeling and understanding and thinking about on the inside. So no, I'm not responsible for other people. And I don't think people who have 500 properties are responsible for other people. Or even if they have 1,500 properties or 5,000, it doesn't matter how many properties they have. They're not responsible for other people. They're responsible for themselves and the condition of their own properties. Now, if they understand it in a symbiotic fashion, then they will create conditions in which that the people that are in those on those properties will then benefit from the most of it, and you will benefit from the most of them, and that's how it works. But no, you're not responsible for them. And I'm not trying to be like arrogant or anything else about it, but that's just the truth of it. And when you live in a time in which that you have such a dramatic separation between the rich and the poor, like we do, and you are going to find that the property owners and capitalists are the ones who separate themselves from everybody else, you're going to find a lot of blame. You're going to look at those people and you're going to say, like, man, they have so much, I have so little, screw them. All right? And that's the unfortunate way it's always been throughout history. It has to do with jealousy or envy or some, I don't know. Like, I mean, I've never really thought about somebody else who had a hell of a lot more than me as being an evil or wrong or anything else. I always thought, man, good for them. I'm hoping someday I can make it there, and I don't want to be punished for doing that. I certainly don't want to be looked upon as an evil person because I worked hard to do it. I mean, you guys see me going through all this. I mean, I haven't had anything, but if I ended up with a business that produced $1 billion a year, I don't want to have somebody who's just like, dude, you have to do it with this money and you have to do it this way. And if you're not, you're an evil person. Just look at the way all these other billionaires are handling their money. Look how evil they are being, And I'm thinking, who are you to judge that? I mean, yeah, they might be doing some evil stuff out there, but again, like, I don't want to be punished for being successful, you know? All right, moving on. It's crazy how fast that yield was dropping. The Fed was going ham and buying it all. Uh, um, I have Edward Jones and U.S. Bancorp. Deja vu. All right, exactly, Kraken. What is the Fed doing? Like the Fed's in quantitative tightening. They're unwinding their balance sheet. They're not doing anything. In fact, they haven't done anything different. What do they do different? What do they do different? Like, what have they done different? Nothing. They haven't done anything different. Like people are like, oh man, they're doing all this different. Like I don't know nothing. I don't know what that is, because as far as I can tell, outside of the balance sheet adjustment change, which was a bit of a reduction in the unwinding, right? So they were unwinding more U.S. Treasuries. They reduced that, but that was a while ago. That was like what, during June that they did that, and it was at the same time that the U.S. Treasuries were going into the bond buyback program, right? So that was the last major change that I remember the Federal Reserve doing. Other than that, there's been nothing different, right? Other than the communication and the perception that people had over it. So, like, they're not jumping in buying all kinds of stuff. They're not. They're unwinding their balance sheet. They're letting stuff go, right? They're pulling in. They're reeling in dollars right now, right? They're going through quantitative tightening. Exactly the opposite of buying stuff. Let's see here. Secretly. Oh, yeah. So devil makes you do the work. They just sit back and watch. How evil was that? Not money, but the love of money. That is the quote. Yeah. See, like I don't even know. It was just like I wouldn't even know. Like, what do you do with a bunch of money? It's just like I mean, I don't know. I don't know. I'd probably travel. I'd travel more. That's probably the only thing that I would really change about my life, because I can't really think of anything that I would really do with money. Like I don't care about material possessions or anything like that. That's not important to me. Right? But I guess eating really good food and then traveling, that would be like the major differences in my life. So I don't think I really need that much money to do that. I mean, maybe if I wanted like luxurious traveling or something, but just to go and hang out and go places and do whatever it is that I wanted to do, I don't think that would really require that much money. So I don't know what the point of making that much money would be outside of what it is that you just truly want to do with your life, which may not really take that much, especially if you don't need that much. All right. Be like Scrooge and swim in your money bin. Now, what I do like to do is take silver dimes and do that with it, like shake them around and listen to them. Really, stock is good for short term. Just picked up 10% in Russell 2000 ETF in 1 month. That's just a simple trade. Yeah, I've been I picked up stock here just recently too. My typical little stock portfolio, Coinbase and Altria, the Russell 1000 ETF growth stocks, the total stock market ETF, Vanguard, ExxonMobil, a little bit of Bitcoin. I would travel and visit all the maritime museums in the USA. Yeah, that would be cool, Nighter. It was funny. When we went because All Nighter and I, we went to and Freddie, we went to the Maritime Museum here in Astoria, and I got the membership because they let you into some other museums and like aquariums and stuff like that. They have other featured places that you can go and you can get in for free. And so one of the things that they had just changed or just included was other maritime museums, participating museums throughout the nation. So I may have access to other maritime museums throughout the nation, and that would be fun to go visit. So you should consider that pass all nighter if you're going to be hitting them up this year or next year. Yeah. All right. I'm glad they dig ditches. I do that as well as a run. Okay. All right. In the market, your money doubles every 7 years. Yeah. I don't know. Like I doubled my Bitcoin. I guess I started that like in 2022, I guess. And I just put $50 a month, or yeah, I think it was for a week or whatever it was. I forget. Was it a week? Yeah, maybe it was a week. I put quite a bit in, a good $4,500 or so, And then most of it went in like throughout 2022. And then I just trying to drop some in every once in a while. So I've got like $4,500 in there, and that's doubled. And so that's like in 2 years, right? Or since I put the majority of it in, it's doubled since then. And that was in Bitcoin. And so pretty simple, $50 a month. See, here's the thing. I don't know anything about investing. I really don't. You know, I tried doing day trading stuff and whatever. Okay. So I asked Lynn Alden, point blank, I said, how do I invest in Bitcoin? How do I know when I can buy at the bottom? And she had one answer for me. She says, you have to dollar cost average for 4 years. That if you dollar cost average into Bitcoin once a month, once a week, whatever it is you're doing, you do it for an entire year, right? For 1 year. She says there is no time in their economic model that they have studied that you will be under, right? You will do well. And so I did it for just 2 years, and yeah, I doubled my money so far. Now, granted, Bitcoin can easily reverse and and dump out, but as of today, right now, boom, I could sell. Right. Right, 427 people watching with 151 likes. I tell you what, we'll go for another 15 minutes. If you can get that like button up to 300, if we can get 150, double the likes, right? We double the likes in the next 15 minutes, and we'll stick it out for a little bit longer. Otherwise, we'll cut it off here in the next 15. So go hit the like button. What's going on with the king dollar losing against the yen? Is the king going down? No, I doubt it. Yeah. I doubt it. All-nighter, can you show up to the next live? Your last live was spot on. The Fed is meeting its directive, yet everyone is expecting Fed to do something to help out with what they want. Right? The Fed doesn't care what we want. Right. Uneducated geologist. Thank you. I love the name. Yeah, no, that's very true about it. Like the Federal Reserve is mandated to do two things, right? Low inflation and stable prices. I want to make sure I state that right. Low inflation and stable prices and full employment. And now, when you have still at 4.5% or whatever it is on the unemployment, it's still fairly low. Like, is that great? No. It's like, that sucks for whoever it is that's losing their job, and the layoffs are rising and the job creation is slowing down. But that's exactly what they would be looking for in order to create the disinflation or the lack of inflationary pressures that would be coming to the economy. That's what they would be wanting. And if they have achieved their mandate of full employment and low inflation and stable prices, then they don't want to really change what's going on there. All right. And so now, again, like the Federal Reserve is not really like, I think a lot of people have a misconception of them, and like somehow, and I can totally see why, especially considering how much of an advantage the people who are in the know can take over the system. Like if they're aware of it, like all these Fed governors and presidents got in trouble right as the pandemic was taking off because of their insider trading that they did. They were like, oh, we don't get really in any trouble for it, and we get to keep the money, so we're just going to go ahead and just quit our jobs after we do these trades. And I'm thinking, and nobody cares. Like, I mean, you guys can really do this, and like nobody's going to do anything? Huh. Oh, okay. Well, I guess that's just the way it is, but that's the way it went down. Like, I mean, there was a handful of these guys who saw that there was going to be certain trades that were going to be doing quite well. They did those trades, and when the news came out, sure enough, they were like, hey, you made all these trades prior to the news coming out. Like, yeah, we did. We quit. Sorry. It was just like it was really worth it to us. But they don't get in trouble. So I'm like, okay, well, I guess I could get mad about that and do whatever, but like I can't stop it from happening. So the only way I can figure out to destroy the system or destroy that is to do exactly what I'm doing here and trying to expose their monetary policy for what it really is. I don't know why I went off like that. Oh, yeah, the Fed doesn't care about you. That's right. Right. Bitcoin is going down. Yeah, it could. And if it does, it does. Like Okay. Like, I mean, my concern level over that is really low. Like, I mean, in my expectations of it going up to like 400 million is pretty low too. So it's like, I really don't care. My whole goal for Bitcoin is to own one. All right. Do you invest in Tether? Absolutely not. I give my money monthly, my Roth max out's the dollar cost average. And I'm not saying like that I wouldn't invest in Tether, but I just don't see any reason to. Like I don't know what it is that I would find as far as an advantage to be like in a Tether type of thing. Like I don't know what that would be. All right. Bitcoin about to tank. Yeah, everybody says that. And even like again, if it does, like, I mean, would it be a surprise to anybody if it was sitting at $25,000 or even $16,000 again? I mean, no. Like, I mean, it wouldn't surprise me. I don't think it would surprise most people either. And if it happened, Peter Schiff would be like, jumping up and down and screaming how like horrible it is and how right he is and how everybody should be in gold. And that's cool. I'm in gold too. So I mean, whatever. I just don't care. It's like, I mean, it's not that I don't care, it's just that my expectations are very low. And so with low expectations, it doesn't really matter what happens to it. I mean, if it goes up or down or sideways, it makes no difference. Doesn't matter who developed BTC when the computer code controls the ledger. That's right, all nighter. It doesn't matter. you know I mean, it was just like, oh, it's a big, the CIA developed. It's a big scam. It's all this other stuff, and I'm like, it don't matter. All this, my house is written in dollars. That's the biggest scam ever. Who cares, right? I mean, it was just like you want to make. I mean, you can't put the fear of like Bitcoin being a scam when everything in my life is based in dollars, like the world's biggest scam. So it's just like, you want me to be even more worried about a scam that's bigger than the scam I'm already in? Like, okay, my low, again, like my low expectations and worries, man, because we're all involved in the biggest scam ever. So to think that we're involved in yet another scam is like, it's inconsequential to the scam we're already in. uh, Dollar is still the prettiest hoe on the trap house. With your knowledge, you can easily become a millionaire. Yeah, but then like, you have to think like, what would it take to do that? Like, what efforts would I have to be going through? What sacrifices away from my family would be taking place? Like, you know, what is it that I would be doing with my ideas and knowledge and research? I mean, if I was to focus in on the stock trading, do you think I would be doing any of this stuff? Right? I would be focused in on that. That's what I would be thinking about. That's what I would be, reporting about. I wouldn't be reporting about this stuff. See, I report about this stuff so you guys can go do your stock tradings from the information that you have gathered from all the rest of the other places that you have gathered information from. Not just me being the little nugget of information that I might drop every once in a while for you, but from all the places that you are investing from, because everybody has their own economy. Like, I thought about it the other day, or no, I was just today, I was talking to Sarah about it. Like, the condition in which that things are right now, everybody, like, people want to say, okay, it's a bad economy, and I'm thinking, well, for who, right? I mean, is it a bad economy for me too? I'm reporting about the economy. If the economy wasn't in the condition it is, I wouldn't be able to report about it, and then I wouldn't be able to make the money that I do on YouTube, and therefore I wouldn't have a good economy for myself. So a bad economy is good for me in the way I use it, because it's not a bad economy, it's just it is, right? But yet some people can report about it being a bad economy and make some money at it and make their economy good for it. I wouldn't be able to do what I do if the economic conditions weren't the way they are. And because of the way they are, I looked at it and said, okay, what is it that I need to do with this information in order to better myself? This is what I've done. Other people might say, no, I need to go and put it in a particular company and stock trade or day trade or invest in cryptos or do my own business or get the hell out of Dodge or whatever it is they got to do. But, for me, this is it. This is what I got to do. And again, like, what would I do with the $1 million? I mean, I guess I would get the Camaro and I would go to some restaurant on the coast and eat some really nice food and hope that there was some live music somewhere around. Like, that's different. That's the only thing that I do that would be different from what I do, because I don't know how, like, the money part of it is like, I don't know if I'm like trying to go for money to make me happy. Like, I don't know if that's going to really work. You know, I mean, I don't think it goes down like that. You know, the layoffs are massive. The government can manipulate the stats. Oh, the government does manipulate the stats. Go check out my video, Fastbee 56 Legal Lies. All right. Redazon, what did you have to say? Because All Nighter said he saw your point. Where is it? Where is Redazone? Am I missing it? Oh, shit. Oh. Sorry, brother, I can't find it. He has some really good questions. I really like Red Zone. Red Zone. All right. Debt is money. Money is debt. No debt means no money supply. Turn to Athens, Istanbul, Singapore, then back to Southeast Asia. I just ordered a main and side dish from DoorDash. It was $34 and $8 tip. Well, yeah. I mean, why don't you just make that stuff at home? Like, you can make, like, for $40, you can buy the ingredients to cook like a bunch of meals at home that are probably far better. You know? But if you don't know how to cook, then, maybe take up a hobby of cooking. It's not that hard. It's pretty easy, and you're actually pretty proud of yourself when you do good meals. I finance cars to people with bad credit and little money. This economy is great for me. All right, money being debt is slavery. Let's cruise down here. You just bought a house. You're underwater. I don't know about that, Philip. Everybody said that about me. Yeah. In fact, I've turned to the point now that I just realize that anybody who talks negatively about the housing market is just simply just jealous that they can't get into it. And I don't mean to be that way, because a lot of people have worked really hard to get there. But anytime I've heard somebody says, dude, you're going to be underwater, you're going to lose your house, you're going to be like whatever, you're going to be in foreclosure, all this other stuff, you're going to lose your job, you're going to, na, 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 na. Like, I listened to a lot of that stuff when I was buying this house. You realize I have over $100,000 equity in this house in 2 years? What in the world? Like, talk about a separation from the rich from the poor. Like, I didn't mean to do this. I'm not trying to be arrogant or cocky or anything else like that, because I didn't think this was going to happen. I didn't know. But being a property owner, or at least like owner, whatever that means, right? So being the property owner is starting already to show the signs of separation between. I can't buy this house today. Like, if I was to try to sell this house, I couldn't sell it to myself, because I wouldn't be able to afford it. All right? That's how it's happening here. People who are like, no, it's going to crash. You think there's going to be a reduction between the rich and the poor? Or do you think that crash is going to give an opportunity for the rich to become even richer, because they're going to be buying up assets on the dollar, like for pennies on the dollar, because they're the only ones who are going to have the cash? Everybody else is broke. You can't buy stuff if you're broke, right? No matter how cheap it is. It was just like it went from $1,000 to $100. Hey, that's great. I still don't have $100. Right? And if that's the case, then the only people, there's going to be even more separation between the rich and the poor. And it's best to understand it for what it is, and understand that there's things that you can do about it. Like, I don't try to be like in a position in which that you have no hope, right? In fact, I find now, like, somebody got on me the other day, and they were like, well, you were richer 2 years ago than you are today. And I'm like, what in the world are you, planet do you live on? No, I wasn't. And they were trying to talk about it from a political, like, or you said 4 years ago, talking about it from a political point of view, saying like, Trump's administration and the Biden administration. And I'm like, what in the hell are you talking about? You have no clue of what you're saying to me right now, because my economy doesn't work like that. Right? My economy doesn't. Yours might have. Right? And I can see where yours and your buddies might have done that. Mine didn't. Right? Mine didn't operate in that fashion. And so now that I understand it, and to the sense that their economy is based off of a political outcome, and now you need to take your economy and realize that my 9 to 5 job isn't going to do it. I don't care how good of an employee I am or how much of a raise I get, it still won't be enough. There is not enough time in a day for you to earn an hourly wage and make it. They're just simply not. I mean, the only way you're going to make more money is to work more hours, and there's only 24 hours in a day. That's it. So you're stuck. The only way you can do it is to try and figure out a way that you can make money while you are sleeping. Right? Just do affiliate sales to do, or even a side hustle, a job. I mean, at least with a second job, you can use that money. Use one job to maintain your life. Use a second job to invest in dividend-paying stocks, to invest in companies, to invest in rental properties. Right? To invest in things that are going to now separate you from the rest of the poor, because the rest of the people out there are still expecting that their 9-to-5 job is going to cut it. And that's not going to happen. I don't like all these degrees out there these people own, which was supposed to give them a better life. They're sitting around working at grocery stores and bars and serving hamburgers and stuff, and they're thinking, "Man, I need more money to make my way through this world." It doesn't go down like that. You need to do more with your day in order to make your way through this world. And it's sad and it's hard and it's difficult, and that's just the way it is because it's life. Right? And you are now living in a timeline in which that the the ever increasing standard of living has now reduced the ability for us to have decent manufacturing jobs here that can compete against the world. So no, there's no return. There's no way it's going back. And the longer you wish and hope and dream that there's going to be some sort of change to provide the ability for everybody to have this wonderful way of life, you're going to be wishing and hoping and dreaming a really long time. You got to take care of business yourself. That's all there is to it. Alrighty, guys, we got it close. We got to 205. We didn't get to 300. I was really hoping we were. We're at an hour into this live stream with $29.98 in super chats. Let me just go make sure we got all the super chats covered. Nope, we got Jeff Welch. Let's go and take a look at that. I tell you what, I'm going to read this last one here. If you guys can get it up to 250, I'll hang out for another 5 minutes. Any thoughts on how you see remodeling going during this tough time in the new housing? All right, so it's 102. You got to 107 to get it to 250. All right. Any thoughts on remodeling? I think that there's probably going to be a tougher remodeling market going into the current future. Now, as time goes on, the remodeling will pick up. As far as the near term, remodeling is going to be a difficult position. And really, that's because a lot of people ended up remodeling over the last few years. Now, areas like I live in a 200-year-old city. Right? I mean, Astoria is old. We have old homes. They are in a constant state of disrepair and always needing maintenance and constantly worked on and fixed up. So the remodel like conditions of my particular town are pretty good, considering like, some place that might be like fairly newly built area. Those places are usually remodeled because they want a different look for the house. They want to make it more unique to them or something of that nature. Remodeling taking place in my area is out of necessity. So again, there's two different, views that you can take on that. Coming from a 200-year-old city, I would say that remodeling in my area is probably going to stay fairly prevalent. But in the general economy out there, I would think that because of the pandemic and the shortfall, or not the shortfall, but the shortage of available homes out there during that time, people were remodeling their existing homes in a major way because they were stuck at home. They had nothing else to do. And so I think that is probably going to put a lag on a lot of remodeling going into the future. So, does that answer that question? All right. You got a few more minutes. Go hit the like button, guys. Oops. And thank you so much for the $19.99, man. That was very generous of you. Live chats. All right, the reason I could not work today is the weather. I just changed my underwear. Well, good for you. All right, how can you talk BS on YouTube? What do you mean? Tell that to the property owners in Venezuela because that is the way the U.S. is going. Okay, well, I don't live in Venezuela, and so far I do live in a United States with a constitutional republic, perceived. We supposedly live in one. We have property rights here. We have a much different condition than Venezuela. Now, if we do go the way as Venezuela, I think I'm kind of mentally prepared for that. I'm not banking on my property. I don't like my expectations of my property doing anything for me outside of providing me with a place to live, a dwelling to live in. And right now, it's cheaper than rent, considering what renting a house of this size would be. I'm getting a really good deal. I got it at 3.125% interest. Like everything about this house is just like awesome. And if I don't have a house at the end of this, whatever, right? I've had houses taken from me before. I've had everything taken from me, and I don't have any expectations of the future and having anything of any kind of major significance coming from this house. Now, my plans for it are significant, right? I do plan on keeping it. I don't plan on having it just taken from me. I'm not going to tolerate something of that nature, right? So I can count on the future of being able to say, hey, you boys want to live here? I got I'm going to have two grown sons here in 10 years who are going to have to figure out their way in this world. And Astoria is a very expensive place to live. And I don't know if I necessarily want to be here all the time. So my expectations going into the future are probably pretty good, considering that I don't think I'm going to lose the house to hostile takeover of government action. I mean, it could happen. I don't think so, right? And I don't think I'm going to lose it to foreclosure or something of that nature, right? I mean, again, it could happen. I've experienced it in my past, so I know what that's like. But we're not Venezuela. It's not the same place. All right, 233. You got about 45 seconds to get 17 more likes going on. All right, I promised a guy in the chat here on Wednesday that I would take his NVDA shares to $100 by yesterday. This week, I will begin to task in taking NVDA to a new 52-week high. All righty, Joe. Good luck with that. Have fun. All right, 11. You're 11 away from hitting it. Thanks for not putting flame effects on thumbnails once you click on one video. You're flooded with alarmist content. Oh, yeah. I don't really do the thumbnail thing. It just takes too much time. Like, I mean, I don't mean to be like lazy about it, but I don't want to spend more time on YouTube. I want to spend less time on YouTube and more time with my family, right? But I know that I have to be out here on YouTube and sharing the content, and I find those times after I have spent time with the family or find those breaks in there, and I come out here and blast it out for you guys when I can. But ultimately, I don't want to put thumbnails together, right? I don't want to do that. Like, I mean, it would be great. Don't want to go through editing videos. Like, I would love to go and edit videos because it's a lot of fun, but it takes a lot of time to do that. And although I'd probably do pretty well, creating more desirable content on YouTube or something, I think the information that we talk about is what's desirable for you. And I think it's what's useful to you. And I think that's probably what's important, not putting creative, videos together. Although I would probably get some good attention, Let's go check out the super chat. We got Sexual Alter 2. I like the name. All right. Thank you, everybody, for hitting that like button. We got up to 250. We'll stick it around for just a little while longer here. Do you think this stock crash is permanent? Months? I'm kind of thinking it isn't, and there will still be one final swing up before the bear. But I don't know. Oh, man. Sexual Alter 2. I'm going to like saying your name. Thank you for the $5. I am not going to try and predict what the stock market is going to do. I mean, I'm really not. There very well could be a stock market crash coming into the future that would give you some serious buying opportunity. I'm a dollar cost average kind of person. I just like buying a little bit all the time. If stocks go down on a particular day, I might jump in and buy a little bit more, like out of place, like out of my normal weekly purchase or monthly purchase that I'm doing at the time. And so in that case, that's the only time that I would ever really think about the market going up or down, because I have zero intentions on selling. Like, I'm not a trader, I'm not a seller, I'm a saver, and I'm trying to build up some assets and not really necessarily trying to roll over assets into, from like overvalued ones into undervalued ones, which a lot of people would do to grow their wealth. And I'm sure that I could probably do that and do well, but like we discussed earlier, that's not what I'm doing. I'm doing this, you know. So I don't know. I don't know either. I mean, I don't know what's going to happen going into the future. Like, especially when it comes to the stock market, anyway. I mean, I can think that with the idea that there is going to be lowering interest rates going into the future, at some point, you would see the markets rally when that actually happens. Like, the market is really upset right now when you have all this like uncertainty about the future. They're like, man, screw this, we're out. And there's really no safe place to be other than the bond market. So you see the bond market rally when the stock market tanks. Well, that's typical. Like, that was a very typical like economy back in the day, or markets, you know. That's something that you would have expected. Did I get another super chat? Where did that go? Nope. Okay, I got them all. Okay, watch what I do, not what I say. Now that July's unemployment up 249,000 new, will Fed drop a point? I don't like. I think the closer we get, and Simon has admitted he is not a financial expert. We are all just discussing ideas for Philip. Yep, that's what it is. I don't think the Federal Reserve. I mean, I don't. Again, like when I think about the Federal Reserve and what it is that they are intending on doing going into the future, is that they still like want an elevated inflation expectation. Like, they want that, they need that, and they need that to raise the neutral interest rate. Now, that to me is probably the most important part. Like, everybody else wants to look at markets or housing or like elections or something else. I'm thinking raising the neutral interest rate is the most important part. Like, that's absolutely critical, because it's the one thing that they could do to actually create a situation in which that stimulating the economy through interest rate adjustments would be an effective tool again, is if they could raise the neutral rate. Now, you think about it, the Federal Reserve, there was a time when they never communicated anything to anybody. They would just wake up one day and there would be an interest rate adjustment. And everybody would be like, holy shit, what happened? Right? And that was the way the Federal Reserve, in fact, that's the way they said it. We need to shock the markets with interest rate adjustments in order for us to get the most out of it. That's what they really believed. And then they found over time that they could communicate their interest rate adjustments and that it was more of an effective tool. Now, understanding that, right? Understanding that the interest rate adjustments through the communications became the effective tool because the rate adjustments through the mechanism of actually adjusting rates doesn't really do it, right? And that's important to understand. Nobody really wants to try and internalize that, right? And because they see that the interest rate adjustments are the impactful thing, which they really are, right? But you can see throughout the last 15 years how when they did this, it didn't do to the economy what it once had. Yeah, asset prices flew off the charts. All these things had taken place like people would have anticipated, but it didn't create the inflationary scenario that the Federal Reserve is mandated to deal with. Right? Interesting stuff, really. You got to break it down when you do. Wealthfront FDIC insured to 4 million. Apple is inferior, just like their phones. How show us money, BS lies. They opened a bank a year ago. All right, market-driven rates dropped from 5% to 3.7 in the past 10 days, and the Fed did nothing. You are clueless about the Fed's effort on things? Thanks, Joe. Why don't you go? Hey, Joe, bro, man, hey, I got an idea. Go find another channel to be at, man, if you don't like it. Okay? The Federal Reserve did nothing different. I don't know what the hell it is that you think that they did that was any different, but they did nothing different. They didn't change anything about their balance sheet adjustments or interest rates. All right? Their communication has changed, and that is the theory that we base this whole channel around, is that the credible threats are more important than their actual adjustment of rates. So if you don't like it, go find another place, bro. It's easy, man. Just click out of here. I just want a deflationary period, considering the fact globally there is a drop in people actually working. The economy should reflect it as well. I'm sure Cantillon has comment about it. About the lack of people? Yeah, well, he does. There's actually a chapter in which that he talks about the increase and decrease of populations, right? And you know what I find very interesting about that is that in that discussion, let me see if I can find it in here. I don't know if I can just find it. But what I found very interesting about what he had to say as far as the population of nations that have more money, you will find lesser population, right? And it's because poor nations have a lesser chance of diminishing their standard of living after they have had children. So ultimately, in rich nations, when you have children, the chances of you lowering your standard of living on account of having children is higher than if you live in a poverty-stricken nation, in which that the chances of lowering your standard of living because of having kids is very small, because lowering your standard of living from anything out of poverty would essentially be death. So, you can have about as many kids as you want, and it won't change the way you live. It won't change the way your condition of your life or anything else. It will just, just be poverty. It'll just be poor, right? But if you're rich and you have kids, well, then you have a chance of losing everything you got going on in your world. I wouldn't say everything you got going on. I say, like, kids are hard to have. They're expensive, but they're incredibly, it's an incredibly rewarding experience, and anybody who is a parent would know that. But yeah, it's not easy, I mean, just trying to be in a good area, like Astoria is a nice area. It's expensive, it's clean, it's friendly, it's low crime, and it's expensive as hell to live here. And I do this because this is the place that I want to raise my kids. I don't want to raise them in some city where they have to worry about having their bicycle stolen. I mean, that's not the condition in which that I want to raise my kids. And a lot of times I almost think to myself, Jesus, I hope I don't raise kids to be very, naive to the world, in a lot of ways. But, this is a nice area, and it's expensive, and it's hard to do this. And I can see why you wouldn't want to raise kids here because of how expensive it is. Alright. Yeah, Philip, both Simon nor myself have any money. What's your point, dull boy? Yeah, And that's what's funny about it is I don't really have a whole lot of money, but what I do have is a lot of things that I have changed about my life and have conditioned myself. It's just what is money anyway? What it doesn't, what does it do, right? It changes goods and services to other goods and services. That's all it really does. And it's not money isn't a symbol of success. Right? I don't give a shit what anybody says. The more money you have doesn't make you successful. It might make you successful at earning money. Oh, that's pretty cool. But that's not a success in life. I mean, how many, honest connections do you have with real people out there? Maybe you're successful at that. Right? I mean, you know how more important it is to have honest, real connections with people than superficial ones? It doesn't have anything to do with money. All right. My standard of living is way better than 5 years ago. Mine is a million times better than it was. Way better. All right. Why are they hating on you, Phil? I don't know. I just jumped on it because my buddy all-nighter was. Right? That's how bros operate. All right. Far from jaded. Thank you so much for the $2. Nice arms. Oh, thanks. Yeah, I got my my muscle shirt on today. That's what I call it, the muscle shirt. It's like a really tight t-shirt. Makes me feel like I'm trying to show off my muscles or something, but it's like kind of sweaty out here, so now it's sticking to me like crazy. All right, Jeff, thank you for being a member of the channel. Hey, Simon, what's your thoughts on reverse repo? Thanks for all you do. Yeah, you bet, man. Thank you for being here. Reverse repos. Let's talk about that a little bit. So understanding the Federal Reserve and the Fed funds rate and how it was that they had actually established the effective fund rate, because like we have to think about it for a second. The effective fund rate, the Fed fund, it's like a target rate, right? It's as if the Fed wrote it on the wall saying, hey, this is what we're shooting for, okay, is 5.25% to 5.5%, right? So they have this target on the wall, right, that they're saying this is what we're going for. Now, the effective fund rate was essentially the overnight lending rate between the big banks. So up until recently, the Federal Reserve operated in what they refer to as a limited reserve system, in which that the big banks like the JP Morgans, Goldman Sachs, those guys, they would have reserves at the, on their balance sheet. And there was like some of them at the end of the day would have excess reserves, and some of them would have limited or have like a limited amount of reserves, right? Like they didn't have enough. And so what the Federal Reserve would do was establish a reserve requirement within these big banks. So if the ones who had excess reserves would lend them to the ones who were in need of reserves so they could meet this reserve requirement, and then they would be able to operate the next day. This overnight lending rate was the effective fund rate. So if the Federal Reserve wanted to adjust interest rates, like in the broader economy, they would buy and sell treasuries off these big banks to adjust that overnight lending rate so that it would land within the target range, right? So now this is how the Federal Reserve operated for a very long time, and this was, again, referred to as the limited reserve system, right? But then during the pandemic, right, well, actually it was slightly before the pandemic, it was September of 2019, there was something that happened within the big banks that drew a bunch of cash away from the big banks, and it sent it over to the Treasury General account, which is an account at the Federal Reserve. But ultimately what happened is that there was this huge tax payment, this corporate tax payment, and it took a bunch of the cash away from the big banks and again sent it over to the Treasury General account, which then deprived or depleted the cash holdings of these big banks. At the same time, there was a bunch of government spending that was taking place, and because these big banks are the primary dealers, they were sitting on a bunch of these treasuries in their reserves. Now, there is times in which that the reserves can act like cash, like on their balance sheet, but then there's times in which that cash is needed to facilitate the trade or in order to conclude a contract. So cash is like what they refer to as like the lubrication for the system. And this cash payment had then drawn away from the big banks and sent it over to the Treasury General account, left these big banks in limited amount of available funds in order to provide for the overnight lending rates. The overnight lending rate, because they couldn't find funding, shot up to like 10%. Are you guys following this so far? This is complicated. I'm trying to make it simple. I'm trying not to go too deep into it and complicate things, right? So ultimately, these big banks didn't have enough cash after this tax payment was made, and they were loaded up with treasuries because of all the government stimulus or government spending that was taking place at the time. And that left these banks without the cash. They were said, oh crap, we can't operate the next day. Interest rates has shot up to like 10%. The Federal Reserve stepped up and says, now wait a minute here. You guys got a bunch of treasuries. We got the repo facility. So what we're going to do is we're going to open up this repo facility. You're going to give us the treasuries. We're going to hand you cash. And at the end of the day, we're going to reverse this and do it all over again so that you always have plenty of cash on hand. And we'll have the repo facility now providing the effective fund rate. So essentially, instead of having this overnight lending rate, which wasn't working anymore, they took the reserves of these banks and then started moving it over to the repo facility so that the banks would have cash on hand. That now moved the effective fund rate over to the repo facility. as the pandemic kicked in and all of a sudden these banks were loaded up with a bunch of reserves, they lowered the reserve requirement to zero, and the system had gone from a limited reserve system to an abundant reserve system. So now these banks are sitting on all kinds of of reserves due to the stimulus spending that was coming because of the pandemic, and that overnight lending rate had essentially disappeared since these banks don't need to lend to each other any further. So now they have all this excess cash that's moving over to the repo facility. They also have another place that they could put the cash, the excess reserves, and that's exactly what it's called, is the account on excess reserves, in which that they get a little less interest rate than they would at the repo facility. Between these two, the interest on excess reserves and the repo facility, they were able to channel the effective fund rate. All right. So this is important to understand because it left the big bank's overnight lending rate and moved over to the repo facility. As the Federal Reserve is moving into the quantitative tightening, it is now diminishing the repo. Like, you're going to find activity going on back and forth within the repo facility, because what the Fed had done then, like, essentially, the idea is that if they keep depleting the quantitative, if they keep going with quantitative tightening and they deplete the cash that is in the system, they will eventually no longer need the repo facility, and that these banks will no longer be in an abundant reserve system because of the depletion, the tightening, the monetary tightening. They will move from an abundant reserve system back into a limited reserve system, and the overnight lending rate will become the effective fund rate again. Right? So, but I don't know if that will necessarily be the case. Like, that would be if it continues in that direction. What I honestly think is that the repo facility will stay a standing repo facility, that it will be in operations at any given time, and that it won't be like, okay, we're using it, we're not using it, we're using it. Like, it'll just be there all the time in case, right? It'll just be there. And instead, they will then direct banks to need who will need cash, instead of like the overnight lending rate. Like, they'll try to find cash at the overnight lending rate from the bigger banks or from the other banks out there. Instead, they are going to find that when they need that cash, they will find it over at the discount window at the Federal Reserve. Now, the discount window from the Federal Reserve holds a very, like, it has a stigma attached to it. Like, if you go to the discount window, you're in bad shape. Like, if you go to the discount window, you're screwed. You're sucked. You're not doing well. But they want to get rid of that belief, that idea. And they almost, and if I don't know if they've actually done this yet, but there is talk of actually forcing the banks at times to go to the discount window to use it, so that the banks who are in need of using the discount window won't be exposed, because everybody's using the discount window. They're forced to at some point, right? And so these other banks who are then, like, saying, hey, there's a stigma against these banks who use it, they wouldn't have that stigma anymore, because everybody's forced to use it whether they wanted to or not. And that is one of the trickeries of the Federal Reserve, and one of the ideas as far as trying to figure out how they're going to establish the effective fund rate. You guys get all that? Did I say all that right? Do you believe me, Joe? Did I get that right, Joe? I mean, I'm uneducated, bro. I don't know. I mean, it took me like, 5 years and about 50 documents to figure all that out, but, All right. Wow, look at that one. Let's go check that out. $9 from Jeff Welch. Thank you so much. This one's for Philip. Hi, Philip. Hey, Philip. Oh, was it Philip? It was Philip. I'm sorry, Joe. It was Philip who was giving me the hard time, wasn't it? I don't know. So many people now. All right. Whew. Can you list the countries with lower living standards in the U.S. and explain how the strong U.S. dollar enhances Americans to buy power compared to these nations? Okay, no. Just think about it it's a long period of time. So this isn't something that you're going to like see take place over the course of like months or even a couple of years or even a decade. It's probably going to take a very long time. Think about it in this fashion, right? It's a 7-step process, right? It's almost like clearly defined 7 steps that are happening. And it's funny because I'm surprised like Cantillon didn't really like break it down into that fashion, but really when you think about it, it just comes down to this. And it can be you as an individual. It can be a city. It can be a company. It can be a country. It doesn't matter. It goes down the same way. It goes down the same 7 steps, right? The number one step is you become industrious somehow, right? You figured it out. You graduated high school and you got your first job and you're now earning money. That's industrious. You become industrious, right? And so when you become industrious, what is it that you do? You're a producer saver, right? So the first thing you do is become industrious, then you become a producer saver, right? Because just because you're industrious doesn't mean you're going to be a saver, right? You might be industrious and just making your way through the world and not really have anything to show for it, right? That's not quite it yet. You need to become a producer saver. So once you are industrious and you work hard and you get those raises and you've been at your job long enough and you get the you know whatever, you get the promotions, you become a producer saver, right? So first you're industrious, then you become a producer saver. When you become a producer saver, the same thing is going to happen no matter what. I don't care who it is, what you do, where you live, what you think. You're going to want to enjoy that money, right? And so what you're going to do is you're going to start raising your standard of living. So again, industrious to producer savers, and then you raise your standard of living. Once you have raised your standard of living, prices start to increase and you move into luxuries, right? So the prices start to move up and you start moving into luxuries. Once you have moved into luxuries because of that higher standard of living that you have, you're going to start finding where foreign production starts to come in. It's competing with the domestic manufacturers who find their way out. Turn the new money off and everybody falls into poverty, right? So it goes through the same 7 steps. The new money comes in. You're industrious, right? You go into producing and saving. You raise your standard of living. You start moving into luxuries. You start buying the foreign competition. You start losing your domestic manufacturing. And once the new money turns off, everybody falls into poverty. And same cycle. Like, look at China, right? China's they're an industrious people. They started becoming the world's manufacturers of goods. They raised their standard of living, and now their manufacturing is finding their way to Vietnam and Mexico and Malaysia and India, right? Going to other places. If they didn't raise their standard of living, we wouldn't have lost our manufacturing to China, and China wouldn't be losing it to Vietnam. Okay? And eventually, Vietnam will be losing it to, somebody else. And how many years down the road? Probably after we're gone. I mean, who knows? Excellent explanation, Simon. Yeah, thank you. I appreciate it, man. I just wasn't giving you a hard time, just educating you about how markets actually work. I mean, here's what's funny about it is that people tell me that I have no clue about how markets work, but yet I go up and I talk about lumber market. Like, I know one market really damn well, like better than just about anybody else does out there. In fact, so well that I've gotten paid to talk about it and gotten paid commissions from people who are just so happy for me just sharing my wealth of information about that particular market with them, and they went off and made a bunch of money doing stock trades with it. Like, I didn't even do that. Like, I could have. I don't know how, but I could have if I knew how. Cantillon's estate needs to make a audiobook read by UE. Yeah, I should do that. Let's see here. Your spending habits or actually not spending. Charcoal soaked is used oil in a powerful fuel for melting metal. Let's see here. Simon, you have a good audiobook voice. Well, thank you. I would, yeah, I mean, it would be fun to do. I use my voice for a lot of stuff, right? I mean, I'm doing sales every day. I come out here on YouTube. I call bingo. Yeah, why not do like some voice acting kind of stuff or, just voiceover work? Ah, there it is. Okay. The increase of population can be carried furthest in countries where here. Let me try it in my audiobook voice here. Hold on 1 second. Don't read our chats. Who's that? Oh, okay. All right, let me do it in my audio voice. Okay. The increase in population can be carried furthest in countries where the people are content to live the most poorly and consume the least production of the soil. In countries where all peasants and laborers are accustomed to eat meat and drink wine, beer, etc., not many inhabitants can be supported. Right? So anyway, what Cantillon goes into to talk about inside of this particular chapter is the increase and decrease of the population and how that is actually done. And really, it comes down to, let me see, it's chapter 15, right? And it says here, population is based on the taste and choices of the property owners. Earlier versions of the Malthusian approach to population growth that it follows some mathematical formula are criticized. This chapter also shows that the opulence and lavish spending of the prince and absentee landlords living far from their lands was responsible for the poverty and declining population of France and ultimately led to the French Revolution. It all comes down to the property owners. The property owners are the people who are in charge of it all. Like, I don't know how else to describe it, and as much as people don't want to believe it, it's the truth of it all. Capitalists and the property owners, they're the ones who live independently of the state. They're the ones who are in charge. It's their tastes, their wants, their needs, their desires that are the ones that are showing up and providing the world that we see today. Right? And I don't know how else to describe it other than you can see it when you find places that are going through gentrification. Right? It's really Cantillon effect taking place. Wire out if you need big amounts. Let's see here. Man, everybody's talking to Jeff. Okay. You had a hole to get hat 5.5 or get the penalty. Shabby clothes can protect you from thieves. No, I agree, Charger Mopar. I actually agree with that. I don't show anything flashy, like my vehicles are really low key and stuff like that. And then I mean, I don't have anything to steal anyway, so it's just like, what is a thief going to really take, So it's just like, if you don't have anything for them to take, then you don't really show anything, you don't really have to worry about it that much. But yeah, and there's something to say about it, like, not showing off, all that flashy, high-end fancy stuff, because yeah, it's just, setting yourself up for thievery. I always have awesome questions until the live stream starts, then I forget. Write them down, man. Kirk is pissed. Why? Oh, I see. Okay, never mind. Okay, is Cantillon? Well, it's spelled the second way you have it there. Santis. Is it Cantillon or Cantillon? It's spelled the way you have it spelled there second, right? I guess Simon has a pretty nice sounding voice. Well, thank you. All right, I have to say, Greg Manarino, very annoying voice. Well, that's yeah. Well, I think that's one of the things that has like kind of the uniqueness about my channel is that, and now that you say it, I want to try and turn it on. But a lot of people have said that it's just like, dude, you got a really cool voice. It's really nice to listen to. It's pleasant. You should do all kinds of stuff, like as far as those audiobooks and things like that. And yeah, I mean, it's cool to have that. It is something that I did practice a bit, especially with like the bingo calling and things. I turn that on. I really turn that on. I mean, I do like announcer voice kind of thing. Some people think my voice sounds nice as well. Good. That's good to have a pleasant voice. It's like pleasant to talk on the phone, pleasant to hear. All right. Gregory Manarino equals Max Headroom. You guys are funny. Yeah, I mean, I don't know. I tried listening to Gregory Manarino the other day, and I can't get into it. I mean, and to be honest, I can't really get into most of what it is that these other economists are saying out there, because unless they can incorporate or start talking about the neutral interest rate or flexible average inflation rate over time, unless they are like incorporating this into their theories and ideas about what it is that the Federal Reserve is going to do, I can't, like, I just feel like they're missing they're missing it. They're missing what the Federal Reserve is actually explaining to the other central bankers out there, and they're talking more about the communications that is happening within the propagandized mainstream, corporate media. And so it's just like it makes it difficult for me to internalize the rest of their information that they're talking, because it's just like if you can't use that part of it, then like everything else is like inconsequential. It's like you have to use the idea that the neutral interest rate was a major problem for the Federal Reserve, and they needed that to be elevated, and the only way they could do that was an inflation expectation that was persistently too high, whatever too high is. I mean, again, too high is a lot like moderately above 2%. What does that mean? Moderately above 2% for some time, with no mathematical formula to figure it out. It's like that, like this. How in the world do you take that and internalize it to now use it in your studies? It makes it very difficult. But once you recognize it, it's just like, okay, I get it. It's for the credible threat. It's for the neutral interest rate. It's for a long-term inflation expectation that is well anchored. Once you understand it from that fashion, all these other communications that these people are putting out there is hot air. It's like it's not even valid. Like it's not valid, useful stuff. It's just it's like, to me, it's just like it doesn't. It has like it's literally hot air. It doesn't mean anything. Like a waste of breath, a waste of effort, a waste of communications. And as sad as it is to say that, because most of these people that I hear are incredibly intelligent. They have massively good information in all kinds of other ways, but they do not got it when it comes to monetary policy. Nobody. Like literally nobody has it. All right. I want to hear the trans boxer's voice. Oh. I'm not going to read stuff anymore. Let me see who we got here. Code for Basalt. She looks out. Gosh. Guys, get off of that. Um, Talk about U.S. dollar strength and how Americans can use that to their advantage in other parts of the world. Well, I mean, do you plan on like I don't look at other parts of the world to invest in, but when the dollar strengthens against these other currencies, that gives you buying opportunity inside of their nation. Like I don't know about buying gold or selling gold and that like in other currencies and stuff, but there's plenty of people who do carry trades some, with a stronger dollar. You can borrow, there was a time when you can borrow cheap yen and lend it, for a higher interest rate to the United States. There was a good carry trade inside of that. That's, when you see the stronger dollar inside of going into the future, generally you're going to see higher interest rates that come from that. So I'm not an investor. I don't invest. So when people say, "What do you do with it?" I'm like, I don't know. What do you do with it, man? You do what you do with the information. It's just like I mean, I think myself, I tell you what I've done. Like people tell me, "What do you do with it? What do you do with the stock?" And I was just like, I buy stocks, I buy Bitcoin, I buy gold and silver, and I make my payments on my house. What are you doing? I mean, it's just like there's no magic secret out there. In fact, there's nothing that you're ever going to hear from a podcast or a video or anything else that's going to tell you what it is that you need to do. If you can't figure that out for yourself, then you're going to be lost on YouTube and in swimming in podcasts for the rest of your life. You can't do that anymore. These videos, these podcasts, and stuff like that is me sharing my opinions and my information so that you can use it in conjunction with all the rest of the research that you have done. All right? That's it. That's what it's for. Like I've done some research. I've come up with what I think is a really good theory on what it is that's happening with monetary policy, incorporating credible threat, which I don't hear a whole lot. I mean, there's other people who talk about signaling. There's other people who talk about the forward guidance and stuff. You're starting to see a lot more articles coming out talking about how the communication is impacting the economy in a profound way. This is it. This is my theory that I have been talking about, and it's not mine. I mean, it's just like the reality of the monetary policy of the Federal Reserve. But this is how I believe that it was taking place. I've been expressing this so much, right, out there. However, somebody else out there maybe have conditioned their life to be much more impactful in a way that the outcome of this election is going to dictate what it is that's going to happen inside of their future. I don't know. Like, I don't know how one would do that. I didn't do that, but a lot of other people seem to think that that's going to be the case for them. So, you know, it's each, to each their own, man. You got to figure it out. Let's see. Roth IRA taxable. Oh, that's Kirk. I'm not reading his stuff anymore. Economics. Oh, this is Jelf. Okay. Economics, philosophy, and psychology are all intertwined. Understanding them can make life a bit easier. Absolutely, it can. All right. Yeah. And I mean, actually, I've said it before. Man, I've really gone off here on this one. Okay. I've said it before. We experience the economy as the mechanical form of consciousness. Right? And I don't care what anybody says, you had a part in everything that has now happened within the economy, right? Your little insignificant part was a major part inside of it all, and as much as you believe it or not. I think about it. Like, the fact that I have this particular drink right here in front of me was because you did what you did, right? And if you didn't do what you did, somebody else was going to do something that was going to be different, that then had its impact on the rest of the globe, that eventually had a parallel in which if this thing came to me, it may have been a different color. Who knows, right? It may have been somebody else who ended up selling it to me. It may not even be here, right? But everybody had something to do with it, a little bit. And that's what's really scary about it, is that people don't think that they have that much impact on the world. They do, right? Like, I think about how a small comment on my channel, right? I don't read all the comments. Right? I know, I can't. I mean, if I read all the comments on all the videos, that's all I would be doing, is reading comments. There's one comment on one video that I had done a long time ago. Right? It says, hey, you should check out George Gammon. I never heard of George Gammon. I didn't even know who the hell this guy who commented. Like, I mean, I'm sure he's a nice guy. I have no idea who he is. Who's George Gammon? Wow, this guy's good. I mean, he's like really good. I should give him a shout out. Like, I don't know who he is, but he seems really good. He only has like, 300, 400 subscribers. I'm going to give him a shout out. The next day, I talk about him for 30 seconds on my channel. Hey, you guys ought to check out George Gammon. He does these whiteboard videos. It's really good, like really, really good. Pretty impressive stuff. Go check him out. That was it. One comment, 30 seconds of video, completely changed everything about my life. Right? That one comment, I don't even know if that dude realizes what that one comment did. Right? Somebody out there somewhere in the world made one comment that changed my life. Right? Like, you're not insignificant. Right? You're not. I don't care who you are, what you did, what comments you have made, what actions you have taken. You have impacted this entire world. You have impacted me. Right? Right down to this thing. It doesn't matter what it is. We all are now part of a single consciousness, and we're all operating within it. And economics is the mechanical form of it. You can see it operating in real time, real physical form. Right? And knowing that that's the case, that we are all intertwined like it. Somebody says, man, I can't believe you got so upset over those painted lines on the road, those fog lines getting messed up. And I'm like, no, man, this is it. This is the consciousness that we are living in. Right? We all live in it together. And now every day I get to see this and I get to relive this thing. Right? Knowing that somebody in their head had this messed up belief and that they wanted to share how messed up it is with the world. And that, again, it's the mechanical form of it. It happens in physical form right there. All right, let's cruise on down here. You're right, we're not insignificant. If we were all band together for one cause, we will not live under the system. The many outnumber the few. We have to learn that. Yeah, I mean, I certainly agree that, that we do not have to live under anybody else's. We live whatever life that we choose to live. And I mean, everything that you are doing right now is because you secretly love it. Even if you are in a miserable state of horrible existence, it's because you truly love it. You just don't know, you just don't realize that's what you love. You know? Because if you didn't love it, you wouldn't do it. And the reason why you love it is probably because it's familiar. And if you think about it, familiar comes from family. And it's probably because of the way that you grew up that you now have this miserable existence that you actually love because of how familiar it feels. Not knowing that you don't have to live that way. You don't have to live that way. You can live any way you want. And you don't have to love the tension and the aggravation and the frustration. You don't have to love that stuff just because it's familiar. You can give up on all that and you can live any existence you want. It's important to know that. Most people don't know that they can do that. Most people have no idea that they can do that. They just literally, they feel the familiar of it, of all the tension, of all the aggravation, of all the frustration, of all the anger. They feel that and they think, this is it. This is what's normal. This is what I love because this is what I grew up with and this is familiar. You don't have to do that. You can step away from all that. Poverty will always be there for you. Yeah. I'm broke but happy. My dog loves routine. Yeah, dogs love routine. The Philosopher's Stone was a dust. I think that having a system is good is just that West have lost track of what should be. There's way more to this. I'm miserable because I'm broke. Yeah, the thing is that I'm not going to say that having money doesn't make you happy. Like, I can't say that, but it's not the money that makes you happy. It's the ability of what money can do, right? See, like, I know I can go out and get a car right now, but it's not having the car, it's the ability to get the car. That's the difference, right? See, it's not having all my bills paid. It's being able to pay the bill. It doesn't matter how much money it is, right? It really doesn't. Like the amount of money is kind of inconsequential to the whole thing, right? Like, it's what you're going to do with that money. What is it that is going to serve you? What purpose is it going to have? Like, after you are able to pay your bills, then what's the point? Like, you pay your bills, you save a little bit up for the future, for your retirement. Okay, now what? Right? You need to collect material possessions. You need to see how much you can reward yourself with all these fancy things in your life or something. Is that going to do it? I mean, is that the point? I mean, I don't know what the point of that would be. Like, I don't see that. Like, to me, that's like, that's like, I can't work towards something like that. That's not going to do it for me. So once you have a position in which that you have your bills paid, well, then you start to look and see, like, what is it that does make me happy? Because it's not the money. Right? The money can make you, like, can get you in a position in which, like, paying your bills, that can make you pretty happy. Like, I know it made me feel a hell of a lot better, and stress relief and all that other stuff. But that, after that, like, it was like, it was cool having the scene, watching the savings, and then, it's just like, okay, so after that, like, what is it? What's the point of all this? What am I doing here? Why am I trying to make all this come down, go down with all this? Does this make any sense? So I had to realize, it was just like, no, the point of all this is that you're doing your passion, you're doing your job, and you're doing what it is that you want to do with your life. Right? You're sharing your information, you're getting out there speaking, you're coming up with these ideas and theories and research and doing all that stuff. That's what you're supposed to do. And this is the reward you get from it. You want your bills paid? Your bills are paid, bro. And what else do you want? I don't know. Well, yeah, if you don't know, the universe isn't going to know either, right? So if you don't know what it is, then maybe you have found happiness. Maybe happiness isn't that hard to find. Maybe this journey is what's making you happy. See, all these questions come up when I start to think about these things. It's not, life isn't easy. Life is not easy. Life is not something that is going to be handed to you in a way that says, hey man, here, all that hard work and success and dedication that you provided for your boss all those years, he's going to step up and now here you are rewarded for a life of dedication. Maybe. I mean, there might be some boss out there who does that. I doubt it. Like, I doubt that's going to happen. I mean, I see, I got a buddy who's like, he's old, right? He's in his 60s. He is scared. You can hear it in his voice when he talks about it. He is scared to death. He doesn't know what he's going to do. He has no money, has no family, he has nothing. He has no possessions. He rents a little place. Once this job is over, what's that? That's it. He knows that there's nothing, like, he is scared, and you can tell, and he doesn't admit it. What can he do? I see that, and I'm like, man, I don't want to be there at that age in that position. Like, that's not going to work. I wouldn't know what to do. Like, I look at the position he's in today, and I think to myself, man, if I was at my age in your position right now, I would be scared. And you're like way older than I am. This isn't some game. Like, you get there at the end of this road, there's nobody there. It's just you. I work hard. I dedicate myself. You'd think that all this dedication and time and everything, society would just step up and say, hey, man, good job. Here you go. No. They'll be like, hey, man, get off my damn lawn. Get out of the street. Stop living in that tent. That's what they'll be to you. They'll make it illegal for you to be out here. That's how bad it'll be. Because there's going to be so many of them. I'm not trying to predict this dude's future, but dang, what is he going to do? And so I see it. I see it every day, just like everybody else does. People have a tendency to, see me here on YouTube and think like, oh man, that guy, he's, got these connections. He's got millions. He's got all this others. No, it's not even like that, man. It's not even like that. You guys have, like, a lot of watching me grow, on this channel, grow this channel, that it's been a long road. It's been very tough. That when I bought this house, it took everything out of me. It took every dime I had. I had $320 something, I think $328 or something, $368 or some shit left in my bank account when I got the check for the down payment for the house. I had no money, zero. And I had basically spent all my money that I was saving to pay taxes with. So then I was in the hole to the government. That was just 2 years ago. I was broke, like zero money 2 years ago. So I'm just like everybody else out there, right? I'm busting my ass trying to figure it all out. And YouTube just happens to be my business, my second job, my side hustle, my thing. Right? I could have done it with bartending. I could have done it with, stocking shelves at the grocery store. I could have done the exact same thing, taking on a second job, but I didn't. I did YouTube instead. And it gave me a great, unique position to be in so that I could do these videos in my free time and not take too much away from my family. But ultimately, I had to work this as if it was a second job. And I still feel like I have to work it, and that, my regular job and my wife's regular job isn't enough, not in our area. We couldn't do it. Raise these kids in a house with 2 regular, 9-to-5 jobs in Astoria. It's like, no way. It doesn't work like that. You have to be a professional. You have to have businesses. You have to have side hustles. You have to have, you have to be rich, or at least, have a decent amount of, income coming in and very low expenses. And you think about it, I'm still driving this old 98 Ford Explorer, and I have no intentions on, getting rid of it. Larry Bird, thank you, $4.99. Thank you so much. Yui, you're the man. Well, thank you, Larry Bird. You have really, really done a lot for, supporting the uneducated economist, man. I really appreciate you. I mean, I don't know how many super chats you have sent me now over the last couple of weeks, but it's been quite significant. So I do thank you, man. I recognize the the support, man. I appreciate you. All right, don't try DoorDash. It's a scam. Yeah, everything should be in balance, not too little, not too much. Yeah. I'm full-time RV living dude with my dog, motorcycle, and truck. That's all I need. My money is just to give me what I need to be happy. Living the retired life, and I'm still young. Live cheap. There you go, Rich. Yeah, and it is. It's just like, I mean, what else is there in life? Like, what else do you need? I mean, outside of a view and music and food, like, I mean, I guess some people really like enjoy the hobby of having toys, like cars or something. Like, cars can be a good hobby, or, maybe firearms is a fun hobby, stuff like that. Like, I think about some of the things that I've enjoyed in the past but even still, like, after you have some cars, like, I have a buddy, like another buddy, right? One of them is just broke as hell. The other one's got a bunch of money, right? He has 11 cars, 12 cars. And he's like in like close to 80. And I'm like, bro, what are you doing with all these cars? You can't drive them all at once and you have to maintain them and stuff. Like, he likes working on them, so it's cool. He's like, no, I like that part of it. That's my hobby. But I'm like, dude, okay, listen, you got these kind of cool cars, right? And there's like, he's just a fun car guy. So he has like Corvette, and he has like, these other little tricked out things that he has done up and stuff. And I'm like, bro, man, why don't you go and sell one of those cars once a year and just go and blast it on some good times in like Vegas or something, man? Just go and just live it up like a king. Right? And I was just like, dude, I mean, how many more years are you going to be able to run around? Because he's pretty healthy for his age. I'm like, how many more years are you going to be able to run around in this kind of condition and enjoy it as much as you can right now? Like, for the next 10 years, you could do this once a year and just blast it out there, man. Just go out with some fun. Like, what are you going to do with these things other than like they're just going to go to somebody else when you pass away? Go enjoy this stuff, right? And he can't do it. It's his hobby. It's like it's too in him. He's like, no, man, these are like my babies, or something. And it's like, all right, this... all right, if you're married, don't go to Vegas. Yeah, I've been to Vegas a couple of times. All right, no, I'm just kidding. People are caretakers of things, How would you blow 20K in Vegas, UE? I personally wouldn't do it. I'm talking about being 80 years old and just like going and having fun. Like, but to me, like I know what I would do. If I was in Vegas and I had 20 grand, I would go and shoot machine guns out of helicopters. That's what I would do. That's the type of stuff that I think would be fun. All right, Wood Floor Alchemist, thank you for the $4.99. The reason most stay where they are is it's comfortable, familiar. Yeah, it's comfortable. Familiar is comfortable. People hate discomfort. Yeah, I absolutely agree with that. That's right. Poverty is a mental state as well. Got to graduate out of it and expect upward mobility. Yeah. Alrighty, guys, man, I have really wound this thing on for 2 hours. I thank everybody for hitting that like button. We definitely got it up to over 338 people right now, well over the 300 that I was looking for. Got 341 people watching right now. I love it when you guys are hitting or have just as many likes as we do people watching. $56.95 in super chats. We're at it for 2 hours here. I think that's probably a fairly decent live stream for you guys. We can keep going if you like, but I'm just going to read a couple of more questions here. If you really wanted to stick it around, get it up to like 370 here in the next, 2 or 3 minutes, and we'll see how it goes. I work 16 hours all week. Boomers have left their kids dead. Yeah. Shabbat shalom. I like to go to national parks and hike. Not cheap, but definitely affordable. Well, I mean, Jeff, I think actually getting there isn't too bad. Like, like the gas could probably be expensive, but then parking really isn't that bad for the most part. And generally, for most of them, it's just parking fee, to get in. So, and then you get to spend all day there. So, yeah, I agree that it isn't exactly cheap, but considering what a lot of other entertainment would be, like shooting machine guns out of helicopters with all-nighter, that would be expensive, right? So hiking in the state parks would be cheap in comparison. Yeah. I like to go. Oh, we already read that one. We came up with a roulette betting strategy that worked at an 80% win clip for 2 hours. We used it. Wait for red or black to come up three straight times. Bet opposite. Interesting. I've worked 112-hour weeks in a steel mill. My overtime is measured in years. Yeah, right. Uh, Oh, pew pew for sure. Yeah, right. I mean, a helicopter shooting would just be like that. Would just be the intent. Like, how much opportunity would you actually have to do something like that? Like, almost none, right? You have to go to Vegas and you have to pay thousands of dollars to do it. But then it would be a cool life experience of being able to actually do that. Like, to feel up there flying around, like just the intense of the height itself, being up there flying around in a helicopter, but then also the feeling of just being able to have that firepower behind you and, unloading into an old busted down car or something like that. That's cool as hell. Like, I don't care what anybody says. That to me would just be fun as hell to do. Um, in Texas, it can happen. Yeah, hog control, right? Write a book you eat. That's my goal, man. I'm feeling somewhat not necessarily ashamed but disappointed in myself that I have not come up with this course yet or a book. Now I've gotten chapters written, but to me, like, I don't know, I'm just having such a hard time. Maybe it's because I don't read a whole lot of books that I'm having a hard time like writing a book, or even because I haven't done courses, I have a hard time doing like building a course. So I know this is all excuses and I do work on them from time to time, but as far as like just getting this thing done, I'm having a hell of a time. Yeah. Do you think markets are down due to uncertainty around the world? Sorry, just jumped on. I think markets are really down because of the fear and uncertainty of what's coming into the future. And so when you have a lot of fear and uncertainty, what you end up having is people getting in out of the risk and moving into like more of a less risk asset. And that's where you see the bond market does well and stocks do terrible. Like, those things usually work inverse to each other. It's only been over the last few years that you see those two markets correlated to each other. That wasn't typical. So really, it's just uncertainty that forces people out of the stocks and into the bonds. And when you have a bond market that is just essentially with the yield as high as it was, I mean, hell, where else would you go? 361 people with 361 likes with 296 people watching. It looks like we're starting to fade away on some of our viewers here. Which I totally get it because it's getting late. Your book can be about your economic theory based on your studies of the Fed speeches. Yeah, I totally agree, Zian. Um, where do I live? I live in Astoria, Oregon. I hope my tenant keep rent low. I help my tenant keep rent low. Yeah, that's good. Like you want your rent as low as possible so that the renter can make the payment. You don't want them to not make the payment. You want them to make the payment, right? But you also want to make as much money off your property as possible because it's your business, right? So there's a nice balance in between that, right? Where there's a spot in which that, hey, this is how much the other places around here are getting for rent. So this is the going rate of it, right? Here's how much that you're paying for it. Here's how much we're offering in consideration of how new or old this place is. You come up with this, and this is where this is where the prices are found. And yeah. Forward price to earnings ratio are over 35 times, which usually signals it's time for a major market price correction. Yeah. At night with thermals and tracers. Oh yeah. Your book could be about the Fed based on the Yemen speeches. Absolutely, it could. All right, where? Oh, we already read that one. Okay, let's cooch down here. All right, let's call it quits here, guys. I'm gonna read one more comment and then we'll call it a night. What was this one? Just say you live on Earth. No one needs to know where you live. That's the kind of intrusive question. Yeah, I know, but it's like at this point, it's like it's already out there. It's not like I really hide. And what am I gonna do? Like, I mean, I'm already exposed this much. It's not like I can go and like, hide now. I mean, I guess if I moved away, then I could tell people that I don't have to tell people where I moved to. But at this point, it's just like, it's too late. Alrighty, guys, you're awesome. Thank you so much for being here. We got the $56.95 in Super Chats because you guys are always so generous with the contributions and supporting the Uneducated Economist. 369 likes with 310 people watching. Thank you so much for hitting that like button. Thank you very much for being here and being part of this discussion. It's always more important to have a discussion about this stuff so we can break it down and understand it a little bit better for ourselves. Get those, gaps inside of the knowledge filled when we ask questions and figure out what it is that we need to do with our information so we can best conduct ourselves and be in the most appropriate positions for us and our families. Hello, fellow Earthlings. May the 4th be with you. All right. Thanks, Huey. Good night. Well, thank you, guys. Bye for now. All right, guys. Uneducated Economist, you let me know.